Kulwin Seehra of GNA Axles about all of this and more. Kulwin, good having you. Thanks so much for taking the time out and speaking with us. Let me actually first start off with the news, and then we'll talk about the quarter and the outlook ahead. This change of norms, what kind of impact do you think it has on CVs and thereby on axle companies?
Hello, good morning. Yes, I'd like to address that. If we see for our company, the commercial vehicle domestic market, it contributes around just 20% of our sales. So beside this, our order book is more than our capacity. So far the situation is okay for us.
Okay. Having said that, do you believe that on that 20% there could be an impact that could come in?
Well, if there is an impact on the realization, presently, like, there is no change in the designs from our customers, regarding the load increase. So if any improvements are done in the design, then our per piece realization will increase.
Okay, what about your numbers, Kulwin? I saw that the revenues did reasonably okay, but the EBITDA margins took a bit of a plunge, as a result of which the bottom line numbers was not as strong as the top line number. What led to this, and what's the normal for the rest of the year on the margin front?
So this is due to the frequent increases in the raw material prices, so which is like a global effect. So that happened because of some change in norms with the steel suppliers, but it will settle down soon.
Would you believe as early as the second quarter, or could it be a bit later on?
Well, I'm not sure about it, but I can say that, like, for overall it should be, for our current financial year, it will be 25% the rate of growth.
Okay. Now, given this revenue uptick, I mean, I would have hoped for some guidance towards what your margin number could look like for the rest of the year, because you would probably be the best person to talk about that. Having said that, on the revenue front, this 46% uptick that you've shown, do you reckon that this is something which could be a new normal of sorts, revenue uptick of about 35 to 48% for the rest of the year, or for the year at large?
Like for Q1 it was 40% growth, but for the rest of the year it will stick to like 25%, and the EBITDA will be around 15%.
Okay, what about the current capacity utilizations? I heard you say at the start of the interaction that your order book is much higher than your capacity. By that, am I to assume that you're operating at almost 100% capacity utilization, and in light of that, are you looking to up or increase your capacities?
Well, currently we are using the capacity at 85%, and that is like the nominal, the way we can use it, because some capacity we have to keep for contingency or maintenance, for model change, things like that. That keeps on. That's an ongoing process.
Okay, so would you need to then expand capacity in a meaningful way, and are you sufficiently funded for the same?
Well, yes, we have plans for the expansion of capacity, and we are working on it. And in the coming year and this year and the coming financial year combined, we will invest around like 100 crores, and that will increase the capacity by 1 million components.
This comes on stream by end of FY19 or slightly later than that?
This is FY19 and 20.
So no, you'll start the full utilization of this capacity what, mid FY20? Can you give us a rough timeline? What month, what year?
So, the additional capacity or the existing capacity?
The additional capacity.
Additional capacity, that will be stepwise, because the way we are investing, whatever comes in the capacity increase, that will be utilized alongside, and completion will be done in the next financial year.
Yeah, so when does the first leg of this capacity come on stream? Is it April 2019, or is it slightly later than that?
So like from the total of 1 million additional capacity, 0.5 will be done in this financial year. and 0.5 is target for the next financial year.
So last question, Kulwin. I would presume that if 0.5 is done in this financial year, which means FY20 would have the full benefit of the expanded capacity, and therefore your revenue growth, which was about 30, 35, 40%, which you believe would happen for FY19, could well see a leg up in FY20.
Well, for this year and next year, we can see a combined growth will be 25% year on year. So that's what figure comes right now.
And you don't need any fresh capital for the same, the capacity expansion.
No, we would. That's why I mentioned like we would need around 100 crores, and we will invest that in this year and next year combined.
You would do an equity fundraise, or would you be sufficient? I mean, would you be taking debt, or are you geared up any which ways?
So we'll take from like term loans from the banks.
Okay.